We are continuing the same chapter, Dissolution of a Partnership Firm. Already we learned to write journal entries, that is for closing assets and closing liabilities account. Then we learned how to do realization account. Now we learn how to prepare comprehensive accounts. That means comprehensive questions we will discuss. You have to start with realization account in this chapter. It's not revaluation that you must remember. You must do realization account, then partners capital account, finally the bank account you have to prepare, not the balance sheet. Because at the time of dissolution, that means we are winding up the entire business. That time, will we have balances of assets and liabilities? No, we will not be having. Because at the time of dissolution, we will sell all assets. Instead of using that term, we will be using the term realizing. So, we will realize all assets, that means we will sell off all assets and we will pay off all liabilities. So, there won't be any balance sheet for you to prepare. There won't be any balances of assets and liabilities. So, instead of balance sheet, we will be having a cash or bank account as third account, and that account should tally just like balance sheet. So, you can check whether your answer is correct or not. Just like balance sheet, this cash or bank account must tally finally. Okay. So, we will work out problems from this portion, comprehensive questions. We will work out illustration 15. Just look into the balance sheet. It is almost similar to the previous chapter. The items are almost similar there, but the treatment, the ways or procedures to prepare realization account is different from revaluation. Adjustments are given like firm was dissolved and the assets realized, goodwill, land and building, all these items are given. Finally, they are asking you to do realization, capital account and the cash account to close the books of the firm. So, we will start with realization, and you remember what is the first step we have to do when we do realization account. You have to close all assets except cash in hand, cash at bank, P&L debit balance, advertisement suspense account, then capital or current account of partners, and then finally you have to exclude one more item, that is loan to a partner, loan given to a partner. All these items must be excluded while you transfer the assets. Rest all assets including goodwill you can transfer or you can close to realization. You understood? Then next step is to transfer or close all liabilities. So, this is the first step you have to remember while you do realization account. So, we will start realization now. Draw the format of realization account. Format is similar to revaluation. We have 4 columns, that is particulars amount, particulars amount. While you transfer assets and liabilities, just look into the balance sheet only. This time, while you transfer the assets and liabilities, don't go and read the adjustments, just look into the balance sheet figures. So, the first item, asset side we will start, and the first item given there is goodwill. In previous chapters, goodwill was distributed among old partners in old ratio, whereas in this chapter, the treatment is different, that we discussed already. All assets including goodwill except those 6 items. So, including goodwill means goodwill also must be closed to realization account. To which side will you transfer? To the opposite side you can transfer. It is there on the asset side or right side, take it to the left side. So, it will be to goodwill. Like this, one by one you have to close all assets. To goodwill, that is 30,000. We are taking the balance sheet figures, just look into the balance sheet for closing. Then to land and building, it is 80,000. To plant and machinery, 56,000. To car, 54,000. Then to debtors. To debtors, 48,000. So now we transferred or we closed all assets. Here we have excluded cash. Cash can be closed? No. So that we can't take it now. That we will take when we do that cash or bank account finally. Then look into the liability side. There we have creditors and capital accounts. Only external liabilities can be closed. That we learned already. So here which is the external liability? Only creditors. So you can take only creditors now. Take it to the opposite side. You write by creditors. By creditors the amount is 50,000, 50. Understood? External liability we closed by transferring it to the opposite side. Okay, so now closing procedure is over. Once you finish closing of assets and liabilities, now you can read the adjustments one by one. The firm was dissolved, assets realized. So many assets realized. What do you mean by realizing the assets? We are selling the assets. So when you sell something, what are we getting in return? We'll get cash or bank. So here we can use the term cash since in the balance sheet they have prepared it as cash account. Clear? They have maintained it as cash account. So you also write cash account. Cash account debtor to, what will you write? Will you write cash debtor to the assets name? No. Assets already we closed. We can't use assets name again. So what should we write? What's the journal entry for realization? It is cash account debtor to realization account. So which side will you post it? It should come on the credit side. The posting will be by cash. The amount of realization is, okay, so many assets we have realized. You write by cash. In your textbook they have written by cash. In a column they have shown each and every assets. Then they have totaled the figure. No need to do like that. You can directly write the figures in the outer column. So you write by cash for every item. Don't write that assets name because assets already closed. Textbook also their method is correct. What they wrote is by cash. In a column they specified the name of assets. So altogether they have written it as by cash. That's also correct. So by cash the realized goodwill amount is 20,000. By cash. Then we have land and buildings. So all these will be written as by cash itself. We are getting the amount. So 1 lakh. Then land and building we wrote plant and machinery is 50,000. $28,000. Okay, debtors 50% of the book value. Did you see the question? It is written 50% of the book value. See the book value. Book value means value in the balance sheet. That is 48,000. So we will realize only 50% means half only we can write. So you write 24,000. So realized assets we wrote now. Read the next adjustment. Realization expenses rupees 2,000. If nothing is mentioned, who will pay the realization expenses? The firm will have to pay the realization expenses. So what will be the entry for that? Realization debtor to cash. Don't write realization expenses because expenses we have closed already. Before you close balance sheet, you would have closed P&L items. Okay, so that also we finished. Now, what did we do? We started with closing of assets and liabilities. Then we read the adjustments. The realization account is over. Now, you have to find the balancing figure as usual. So, here balancing figure is loss. So, you write by loss on realization. As usual, transfer it to partners. Don't write revaluation. Make sure you prepare realization account at the time of dissolution. So, ABC 24, 12, 12. So, you can write 48,000 and the total is 3,20,000. Write the totals and you can close this account. Next, what should we do? We have to start partners capital. It is just same as admission chapter and retirement chapter. There is no change in preparation of partners capital. So easily you can do that. Particulars, how many partners? 3, no? Yes, ABC. You have to start this with the opening balance, and the opening balance will be written on which side? It must come on the credit side for capital account. So you write by balance brought down. The figures are 80, 80, 60. Take it from the balance sheet given in the question. Yes. The next step, what we were doing when we did partners capital in previous chapters, what was the next step? Once you write the opening balance, you can read the adjustments or you can look into the balance sheet. 4 steps you have to cover anyways. So look into the adjustments, but in this chapter, instead of reading adjustments again, the easiest method is you just look into the realization account that we have prepared. See both sides. See the debit side. Do we have any partners capital account here? No. Credit side, did we write by partners capital? No, we haven't written. If you have such items here in realization account, just take it to the opposite side of partners capital. Suppose you had written 2A's capital here. What should we do? This should come on the credit side of partners capital. Understood? So instead of reading adjustments again, this would be more easier for you. You just look into the realization account. If you have written 2 partners capital, 2A's capital here, just take it to the opposite side. To the right side you take in, write in partners capital. Then if you have by C's capital here on the credit side, that should come on the opposite side. That means in partners capital it would be written to realization. Do you understand? So that is how you have to do the second step in partners capital. Instead of reading adjustments, this is what you can do. Now, if you see this, loss is being transferred to partners capital. Here you have partners capital. That we can take. Otherwise also you remember the third step or fourth step we will be doing this transferring loss on realization. So automatically we will be covering this step, or else while you look into realization also you can see capital accounts, you just transfer it to the opposite side. So now we can write it as to realization, or you write to loss on realization, both are correct. To realization amounts are the loss 24, 12, 12. Understood? So now we wrote the opening balance, then we transferred the profit or loss. We covered one more step, that is adjustments also we covered. Nothing is there to be written. Fourth step is look into the balance sheet, see both sides. See whether you have any general reserve, P&L account debit balance, workman compensation reserve, all these must be transferred just like previous chapter. Goodwill is there on the asset side, but will you transfer goodwill to this side? That you can't do, because goodwill treatment is just like any other asset. Goodwill, what did we do? We have already closed it. Clear? Don't go and distribute it. We have already closed it. Goodwill treatment is different in this chapter, that you must remember. Yes. So we finished the partners capital account. We wrote the opening balance. We wrote the loss on realization. Only 2 items are there. Clear? All 4 steps we have covered. Now you just find the balancing figure. Balancing figure we can't write as 2 balance carry down because we are not preparing balance sheet. Instead of that, this will be transferred to the next account that we are preparing, which is cash or bank. Here we are using the term cash. And the balancing figures are 56, 68, 48. 68 and 48. These are the balancing figures which we wrote as to cash. With this your account is over. you can close the account. Understood? The next one is, next what we have to do is cash or bank account. So the format is particulars amount, 4 columns, just like realization account. What you have to do is look into the realization account and partner's capital. If you have written 2 cash there, that should come to the opposite side. Just transfer to the opposite side. Then finally this account should tally. And to start with this account, the first step is write the opening balance. For every account we are doing the same. Partner's capital also we started with the opening balance. Here also we have to start with the opening balance. Which side will you write? That is the question. This is cash account. Cash account, what is the nature? This is an asset. Asset account will be always having debit balance. So you must write the opening balance on the debit side. That you must remember. Whereas for capital account, it is a liability. We wrote the opening balance on the credit side. Cash account, you remember it is an asset. You must write it on the debit side. If you write on the credit side, this entire account will go wrong. So write the opening balance carefully. And from where will you take the opening balance? Usually from where you are taking? From the balance sheet given in the question. So here there is an opening balance of 2000 that you write. Next what you have to do is take your realization account, see both sides. Here if you have written 2 cash, just see whether you have written 2 cash. Yes. This must go to the opposite side of your cash account. That will be written as by realization 2000. Likewise, you have to take each and every item. Then, just see the credit side. You have written by cash, no, so many items are there. All these should come to the opposite side. If you want, you can add all these figures and write it as a single figure, or else separately you take and write. So now, all these you can write to the opposite side of cash account. This will be written as to realization. Now I am just writing the total of those figures which we have written as by cash. If you want, you just take each and every figure and write. You just copy paste to realization. Individually you write. That's also correct. So here the total amounts to 2,22,000. Then with that your realization is over. See partner's capital. Didn't we write here 2 cash, the balancing figure? So this also should come to the opposite side. 56, 68, 48. That is by realization. Sorry, not by realization. This is partners figures we are writing. So write their names like by A's capital. This is from capital account we are taking. By B's capital and by C's capital account. So from partners capital also we transferred. Now the cash account is over. It's very easy. Just start with the opening balance. Remember to write it on the debit side. Then you just have to look into realization and partners capital, transfer it to the opposite sides. With that your account is over, and this account should tally both sides. You must get the same answer. There won't be any balancing figure. So here the balance sheet total is, did we write all items? Oh, I forgot to tell you one thing. That is, see, when you prepare realization account, I forgot to tell you this. When you prepare realization account, you must check whether all external liabilities are paid. Here there is an external liability creditors, and that we closed to the opposite side in realization. Next, once you finish the adjustments, first you transferred the assets, then you transferred the liabilities, adjustments also be finished. After that, you have to see whether all external liabilities are paid off. Here, did we pay this creditors? Nothing was mentioned in the adjustment regarding payment of creditors. Even if nothing is mentioned, you must assume that the firm will make the payment only for external liabilities. So that point you have to remember. Even I forgot to tell you that. So you have to pay off the creditor. So you include this item there. To cash, that is creditors figure, we have to pay off the creditors, that is 50,000. So there is one more item to cash. Like you people write for the exam, though I missed one item, the balancing figure is correctly because I took it from the textbook. So just include it there. To cash 50,000, that is creditors paid amount you have to write. So see whether all external liabilities are paid off. So now this item will also appear in your cash or bank. It will come on the credit side by realization 50,000. With that, your account is over. This should tally. See, if you have missed creditors, this account will not tally. So that time you can identify the mistake. You yourself can check whether the answer is correct. Here it is 2,24,000, the total. Understood? So this is how you have to prepare the comprehensive accounts, that is realization, partners capital and cash or bank. It's not the balance sheet, it's cash or bank account, and which should tally finally.